Okay, folks, good morning. Excuse me. Welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, September the 2nd. So I go back to the gym yesterday for the first time in 5 months. And if you see me grimace throughout this video, it's due to pain. Uh, Normally, when I go back to the gym, I may take a few days off. I'll have uh, pain the following day. I had pain a half hour I left the gym yesterday. Uh, and this morning, forget about it. I woke up and 3 times the pain I was in yesterday. So it's a good feeling. It's good to be back. A lot of work to do. Let's get to economic data. We saw the dollar jump yesterday. That pushed gold, the precious metal names, back a bit. And the reason why that occurred, besides technically, I mean, if you take a look at the price action of the US dollar here on the 31st, we saw what you call a doji star formation. That's a sign of indecision, a good probability that there's going to be a trend reversal. You saw something similar back here. Excuse me. Back here, back here. Do I think that this has legs? Probably not. The reason why it rallied is because you had the U.S. manufacturing or ISM index rally to new 16-year highs. So good data, definitely dollar bullish. And we'll probably see more of this. I mean, we see a shock to the economy. Is it going to be any surprise if we see a dramatic ramp up in manufacturing as people go back to work? I don't think so. Longer term, should the dollar continue rallying? I don't think so. What we're doing is dollar destructive. The Federal Reserve is printing dollars, and when you print more of something, it has less value. So especially with yields dropping again. So I don't think the dollar rally has legs. It is rallying this morning. Might it go for another week? Sure. But I think it's a bull market rally within a bear market. Let's take a look at other data that's coming out this week. We have the ADP employment report coming out later today. Factory orders, the Fed's Beige Book at 2 p.m. Initial jobless claims, which has become important of late. They're looking for a firm read below 1 million. We haven't been able to get below that mark. And on Friday, we have the Pimp Mac Daddy of all economic data, and that is non-farm payrolls. Good morning, Jay. So a lot of economic data coming out this week. Watch average hourly earnings. See if that spikes up, because that would be construed as being inflationary. Let's go to the pre-market activity. Let's start with the US dollar. Strong move, up nearly a third of a percentage point this morning. We have recaptured the support level. It has been retested. This is a 4 hour. Oh, actually, sorry, this is not a 4 hour chart. Let's go to a 4 hour chart. Okay. Still a breakout. We have resistance at 93. So with this type of move, you would expect pressure on gold. There is pressure on gold. Gold, however, is holding support. We are holding 1973 the ounce. I work all day, brother. No, I'm not retired. I'll never retire. Taking a look at silver. Do 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 do. I have too much stuff up here. Here we go. Silver off by 1.75% this morning. Holding support. Taking a look at other commodities. Let's go with light sweet crude. Breaking down. Light sweet crude is breaking down. So, yesterday's 16-year high and rally in crude prices, in manufacturing, is not helping crude any. We're up, but we are losing momentum and weakening here. Okay. Let's see if we break this lower band of support. I mean, that's the true support level that we need to hold. That's our warning flag. This is the primary lower band of support. Let's see. The Russell. We expected over the weekend that we'd see a breakout in the Russell. It looks as though we're getting that breakout. We're up over a 0.5 percentage point this morning. We had broken out this last 4-hour bar back here. Now we're retesting the breakout point. And it should hold. This bar has only been open for 8 minutes, but it should hold. I think we're going to head up higher here. When is the tech bubble going to deflate? Great question. I was looking at the XLK the day before yesterday. We'll come back to this in a moment. We'll just talk about the XLK for a minute. The XLK, this is the technology ETF. I thought we were going to see some topping action. You saw filled candlesticks here. Volume was meh. It was okay. It was dropping off and picked up a little bit the day prior to last, but yesterday we surged. Now RSI is at 82.50. We are not going to stay there. Now, does that mean that we collapse? Probably not. I think that they're going to keep this market moving up higher through election day. Come hella high water. They're gonna keep it going through election day, and after that, the insanity of what the Federal Reserve is doing. There's really no need after election day to continue down that path. So I think that they'll probably change policy a little bit, and that's going to have an effect on technology and on the rest of the market as well. So at any time after the election, I think we're going to go. The technology sector could begin to deflate prior to that. as long as we're seeing sector rotation into the banks, as we're seeing right now. I mean, if you take a look at the XLF, it began moving up higher yesterday. And yet yields moving lower yesterday, yet the banks were up. That was a good change in the normal negative divergence that you get. Normally the banks are down when yields pull back, but that wasn't the case yesterday. So to answer your question, when will the tech bubble deflate? Technically, at any time, but when you consider the election, I don't put all that much emphasis on the chart so much because you have so much cheap money sloshing around out there, keeping this bubble aloft. And if you go back to the 2000 charts, you'll see. I mean, it just got so extended; it was ridiculous. And every time you tried to short, you got burned. And that's why nobody really shorted back then until after the bubble blew. So yields on the week are down, yet the banks are up. Good sign. Let's go back to the pre-market activity. The NASDAQ 100 up another percentage point. RSI 4-hour basis 79.97. That gas is flowing. Let's bring it up. Yeah, definitely a rough week so far. It looks like they're trying to stabilize it here. Yeah, so I think it's entered into a trading range because the longer term trend here is higher. No new weekly high. An ominous week, no doubt about it. But the week is young. And we may rally back. 30-minute chart, you can see that they're really trying to consolidate it here, and they're going to try to rally. Does that rally hold? Not quite sure. Let's check out the S&P 500. We skipped over that. Up strong. We do have an upper band of resistance here. Looks as though we're going higher. Bitcoin. Bitcoin was up yesterday. It was a nice move too, and now it's pulling back over 2%. I'm still waiting for that 10,000 mark to get retested. See how copper's doing. Copper continuing its move up higher. Home heating oil. consolidating. I gotta get a full tank before they shoot that price up. Bonds. Bonds are down slightly, but I think that they're getting ready to rally yet again. That means more pressure on yields. I think what we're going to do this week is retest last week's support level on a weekly basis. Here. Right down here. This is a 10-year yield for those just joining. 10-year yield, weekly basis. I think we're going to retest, let's call it, what did we close yesterday? Let's say spot 6.7, spot 6.6 on the 10-year yield. And then we should bounce. Because this was a significant breakout last week. This is a beautiful W formation. In fact, I want to take a look at a monthly chart of yields. I mean, this looks like we've seen a bottom on yields. So I'm expecting a retest again of weekly support, then expect a rally. If we get that rally, what I want to do is I want to be a buyer of the banks. The banks are still going up despite yields pulling back. Imagine what the banks are going to do if yields rally. So that's the rotation we've been looking for. It's happening. We'll lean more into that trade. I don't want to bet that traditionally inverse correlation of yields pulling back and banks rallying is broken. It was yesterday, but that's one day. It doesn't make a trend. Let's see whether or not we are able to continue to rally on the banks with a pullback on yields on the week. But I'm sure that if we rally on yields, along with the stock market, the banks are going to take off. What else do we need to go over here? The Nikkei. Ripping. Let's go to a weekly chart of the Nikkei. Buffett's now bullish on the Nikkei. And technically, I see why. We have a nice inverse head and shoulders setup. There's a left shoulder, head, right shoulder. And we have broken out. And we are very close to a confirmation continuation breakout on the Nikkei as well. Japan is looking really good. This is the euro. A little bit of topping action here on the week. All right, let's take on some chart requests. And this segment of the show is brought to you by our friends over at Trend Spider. And they are your next level in automated technical analysis. And what I mean by that is that we have a lot of new features besides what I usually go over, which are the hey Pat, you got it. For whatever reason, they blocked you. This message was held for review by YouTube. This is an honest man, YouTube. Don't hide his comments. There we go. So they just came out with seasonality, functionality here, as well as analyst ratings. So if you appreciate the value of automated trend lines, as I do, I call it my spell check for technical analysis. This is for you. Click of a button. You want to know where your support and resistance levels are? There you go. You want to overlay on top of a daily chart, weekly resistance and support? There you go. All with a click of a button. There's a link below, 35% off, and it's included with our silver and gold level memberships. Just go to my website, thecontrariantrader.com, and it's free with silver and gold level memberships. All right, that's my plug. Let's get to chart requests. Log in. Let's see if I have anything here. CTT for Franklin. Okay, then I have Patch. CTT. What is CTT? Catchmark Timber Trust. All right, before I go to this, let's go to a chart of, I'm assuming that this is a lumber play. The rally in lumber has been incredible of late, but it has taken a bit of a pause. Okay, this is a weekly chart, lumber prices. All right, now let's go to CTT for Franklin. All right. Monthly chart first. Is our monthly trend lines. You have a real pretty W formation forming here. The concern I have is that you have some huge volume shelves above. That tells me that there's going to be a tug of war between bulls and bears up there. So I can't buy it into that kind of resistance. And you can see that resistance back here in February of 2017 is holding, and we're not even at that volume shelf yet, which begins right in here at $11.02. And it continues up through $11.83. So let's drill down. I'm liking the RSI, Stokes, I should say, sorry, Stokes. Weekly chart. You can see when you take the automated trend lines off, pop them back on, how valuable they are, picking up resistance. So we have clear and defined resistance above. If you're going to enter this trade, no matter what I say, you're just looking for a strategy, you got to wait, and I would be very, very small with my accumulation here. I would average up. Nibble, nibble. Let's go to a daily chart. Yeah, the daily chart looks good. I mean, it really tells a story about when I would want to be involved with the trade because the automated trend lines pick up a resistance level, which by and large is very close to where I have my resistance level, just a different view. Uh, we are obviously pulling back. Yesterday we flashed a bullish key reversal bar up and into a volume shelf, which is in and of itself resistance. Would I buy here? No. I would wait for the breakout, the alert, just as we have it set, and then add on strength. I don't like these Stokes declining down below the 50 mark. We know that rallies tend to fade when you have Stokes down below 50. So yesterday was a good day, but we could rally today only to see that rally fade. The 3 p.m. hour is the magical hour. Wait for the final few minutes of trade, enter your position. The final few minutes of trade when it appears as though we are about to close above this resistance level. And then we'll revisit it in the future. Let's check out the seasonality. It only goes back 7 years. Let's validate that. Yeah, only goes back to 7 years. The month of September, 57% of the times we are up in the month of September, and that spikes to 67% in October, and the same deal in November. So, meh, not great odds, but the odds are in your favor for the next several months that you see up months. So that's my take. What else do we have? Pat, SHLL, Tortoise acquisition. Wow. Continuation breakout. You in this, Pat? Forget the monthly chart. Weekly chart will be coming overboard again. But still, it looks as though we have room to run. I think we're going higher. 4-hour chart. No resistance above. We're at all-time highs. No indication that you have sellers moving in. We closed right at the highs of the day yesterday. A W formation on a 4-hour basis on RSI. It looks as though it's going to go up higher. Nice chart. Seasonally, I don't know how much data there is here. There's not a lot, not worthy of even talking about. Thin data is bad data. DPHC. Monthly limited data. Weekly chart, we're off the highs of the week. It appears as though we have no overhead supply above, or limited, I should say, limited overhead supply above. I like this lower band of support if we happen to get down there as an entry point. Yesterday was an up day. Let's go to a 4-hour chart. 4-hour chart's looking good. We broke out on a 4-hour basis. out of this triangle formation or wedge formation, whatever you want to call it. And I think we may head up higher here. So I think that it's okay to nibble on, especially if we do a retest of the breakout point. I'll send this over to you. So you can have the breakout point to reference. Oh, was in it? Okay. So I like it. I think that it's setting up for a continuation move higher. It looks good. But I would stay small right now. Wait for that daily breakout to get big. A breakout above this upper band of resistance. And then add more. I would stay small right now. What's the next one? Workhorse. That's a popular stock to go over. KHS. Daily chart looks outstanding. Let's pull back first before we go talk about the daily chart. We have a new monthly high, always good to see, especially early in the month. Weekly chart, outstanding. We have a breakout on a weekly basis. The only thing you need to worry about is, at some point in time, in all probability, we're going to get a retest of the upper band of this wedge formation here at around 18.21 per share. That's always a threat. But man, I'll tell you, this chart looks ready to rip. We did close out above the third standard deviation Bollinger Band. We know from past history with this stock that it frankly doesn't care. But at some point in time, the chickens come home to roost and gravity becomes a serious matter to be dealt with. We have an alert here that never fired off. And this one fired off yesterday, as a matter of fact, at the support level. So I think it's going up higher. I think it's going up higher. So I like it. NCLH. Rest in peace, Amanda Hump. Liam, I'm not familiar with who that is. If it's a family member or a loved one, my condolences. All right, so the anti-COVID play. This is like the Pimp Mac Daddy of them all, along with Carnival, the airlines. We've gone over this one before, and I think that what we need to do is, I don't know how much visibility there is with the cruise liners. I haven't looked into whether or not they have any ships operating, whether or not they've been given the green light. I have no clue. I haven't looked into it. So I'm going to plead ignorance on that front. Were there visibility, I would probably be a little bit more willing to accept the risk that these names bring. If there is no visibility, ongoing concern issues are out there. I mean, these are expensive companies to run. And their revenues, what revenues? I believe they're getting bookings, but may they need to be refunded. I don't know. I have to plead ignorance again. So looking at it from a technical basis, if I had to say, you know what, it's make or break time. When do you buy it? Well, I like 1845, a close above that mark, because it marks a rally up and through a massive volume shelf. We're up above one of them. Now we're into a second one. And you can see that after 1845, those volume shelves decline dramatically. I don't know how much we could really look into seasonality, which is historically very, very poor. This goes back only 8 years. Let's see if we can get more data. I know Norwegian is not a new company. No, that's all the data that comes out. So historically, the month of September is a meh month. 50% odds that it's going to be up. October through December looks really good, and then we drop off dramatically in January. So I would wait until 1845 on Norwegian. Pat, it's a good point. Pat, I got to say, I don't know. I don't know. So my opinion is based purely on the technicals. If I had to hazard a guess of when I would want to get involved. On a weekly chart, you're seeing a higher low here, but it's all lethargic trade. I haven't looked at the short interest on these names. Perhaps it's time to revisit them, to be honest with you, and do a little bit more analysis. Daily chart, we're trying to break out, but we broke out here on the 28th. We were rejected. We have a breakout point failure. You got to wait until forget the daily charts. You got to pull back to the monthly charts. I mean, daily charts are just chopping people up and spitting them out. You got to wait for a monthly breakout above resistance. That's my call technically on it. And with that, folks, please smash the like button. Everybody have a profitable trading day, and I will talk to you tomorrow. Be well.